Hello YouTube family, welcome to another video, and in today's video we're going to look at the new IPO, another one. So I'm going to look at this IPO, I'm going to look at the offer, I'm going to look at the details of the financial statements, I'm going to look at the story of the business, and I'm going to also look at the whole industry. So I'm also going to do an overview. So it's not going to be a very long video. Just want to cover the main details about the offer. So I'm going to just go through the prospectus. Maybe I look at a comparable company such as Elite Diagnostic, and then I'll just conclude. I might do another video that give a price or a valuation if it's necessary, but for now we're gonna just go through the prospectus. Let me know what you want in the comment section, and then we'll go from there. So the company that's being offered now is Image Plus Consultants Limited, and they trade as Apex Radiology, and it's a company incorporated under the Companies Act of Jamaica 2004 according to this prospectus. So that's the first thing we should note. The invitation opens on December 28th and it closes on January 11, 2023. That's if the IPO isn't sold out prior to the closing date. So let's get into the meat of the matter. So the invitation for subscription, the company is offering up to 247 million new ordinary shares at a price of $2. So this is quite different from the last 3 or 4 IPOs. Every other IPO was being listed at $1, but it doesn't really make a difference of the price if you understand the value. But anyway, so the company want to raise a maximum of raising up to $495 million. So let me look at this, the share allocation. I think they will have some more details going further along, but for now I'm just going to look over this. So the broker reserve is 5 million shares, and key stakeholder reserve shares $42 million. So those are like doctors, referral doctors, suppliers, consultants, and professional advisors. So those are persons aligned with the company, and doctors, referral doctors. And then you have employee reserve shares, which is up to 17 million. Well, we could call it up to 18, nearly $18 million, but it's really 17,875,000. So those are for permanent employees and directors of the company. So as I said before, it's going to be a summary, so I won't go over every single detail, and I encourage everyone to read this prospectus if you're interested. And I'm not a licensed financial advisor, so this is mainly for educational purposes. So this company basically operates in the radiology industry, and it's a medical company. So that is a branch of medicine that deals primarily with imaging technology and imaging technology to treat and diagnose disease. So if you ever had a broken bone or know someone, these are the persons that will do an x-ray or the CT scan, MRI, and also other things like fluoroscopy and all of that. So it's basically imaging technology to treat and diagnose diseases. This is the industry. And one similar company that's on the stock market already is Elite Diagnostics. So if you really want to understand this company more, you could look at that company and look at the issues of that company, the industry characteristics, and all of those stuff. So these are like the due diligence, respect, responsibility for the prospectus, contents. As I said before, I want everyone supposed to read this if you're really going to invest. But I'm just going to scroll over the main detail. Yeah, this prospectus is 168 pages, so it's not a bad read. Can be read it can be read in a few hours. Let me go scroll down. All right. So who is the issuer and what is being issued? Image Plus Consultants Limited, company incorporated in Jamaica. So we already discussed that. The company, yeah, 4 branches. Basically, when I was scrolling past previous, yeah, 4 locations. And I just want to see what they want to do with the money and where you can apply. So if you want to apply, you can check JMMB's Moneyline platform. Also, I'm not sure yet, but it might be open to other brokers very soon. So you can check your broker and look out, follow the JMMB page. You might get more details on that for other options. So yeah. So the basis of allotment, they say first come, first serve, provided, however, that where applications for non-reserved shares in aggregate exceed the number of non-reserved shares. The company reserve the rights to allot non-reserved shares to such applicant on a pro rata basis. So seem quite similar to the previous IPOs. The difference though is that this IPO, to me, based off just looking at the amount of money they're going for, you're asking for more money than the 2 last previous IPOs. Well, at least for the general public, because the last IPO I covered on my channel, the company, it was Regency, they wanted 100 and something $million. They were allocating that to the general public, but they are offering way more shares. But this company is a bigger company anyway. So let's look at what is the current and projected capital structure of the company. So the company is issuing ordinary shares only. So investors should know the difference between preference shares and ordinary shares. So yes, ordinary shares is what? Well, they have different rights and characteristics. Ordinary shares, you can vote at shareholder meetings, and you receive a dividend. But with a preference share, you will normally be the one who normally get the fixed amount of dividends, either per month or quarterly or yearly. And but ordinary common shareholders, they have a different order in terms if there should be a liquidation of the company, and preference share would be up or in that chain more closer to a bonds. Anyway, I'm not going to go into that. So The number of ordinary shares pre-invitation was 900 million ordinary shares. I want to know after, because that can give me the valuation quickly. So the expected number of ordinary share post-invitation, if fully subscribed, would be this is 1.2 billion. So let me check this now. So this would be I want to see. Zero times 2. So this company would be worth 2.4 billion dollars right post the invitation for this company, for this offer. So the company is basically valuing itself at 2.4, near almost 2.5 billion dollars. And the number of shares as percentage of issued shares post invitation is 20%. So they are offering 20% of their company. So let me look. Like the content how long don't want to be long on this video. Chairman's letter to in 1996, what started as a desire to provide affordable, high-quality diagnostic imaging services from an easily accessible location became a reality. So, co-founder Elliot and Bridgewater. So, we'll look at who the chairman is. That is one of the co-founder, Bridgewater. Well, let me look. So the company started in 1996. The chairman is Dr. Carlin McDonough. So the company was started in 1996. 26 years on, the company has 4 locations and offer multiple modalities, including X-rays, ultrasound, MD, CT scans, fluoroscopy studies, nuclear medicine, and imaging guided interventional procedures. So the company offers some very critical services in the medical field. So I think it's a very important company. They have an important role in the society. You should read all of these prospectus. So you see, I'm skipping out some, but let's see this diagram. Company started in 1996. Location in Portmore, St. Catherine, opened 2003, subsequently closed in 2014. So they closed their Portmore location. And I thought when I was reading before, because I read like a few minutes before the video, the company was saying that in Portmore, it was a small community at the time, and basically to me the demand wasn't enough for the services. And they say everyone was working in Kingston and doing business and everything, so everybody still was going into Kingston. So that location was closed and they opened another location. They have 3 in the corporate area and 1 in St. Ann, Orcherius. So yes, so you have the number 3 area state. They have 1 in Winchester Road, which I think that's their biggest location right now. And the most recent one was in Orcherius, which opened in November 2021. So that's it. These are the definitions. You have to read these things. The lead broker, JMB. So For those who have a JMB account, this should be easy for you. But I think there should be more brokers. So the general public, no, this is the share, our entire share. They're giving the general public 73%. So of the total offer. So this should be a much more liquid IPO. Regency, the recent IPO that was listed, investors got, I think, up just about 10% of the company. That's a very illiquid stock. This company is offering more money, basically more shares, and now they're giving up more as a part of the entire offer to the general public. So one thing is about this company really is in need of, really want capital. And I'm gonna say more things in the, as a matter of fact, I'm gonna do another video and I'm gonna do a comparison between Elite Diagnostics, and I'm gonna reserve some of those thoughts, those videos. But this tells me something that the company wants capital, wants more capital. Company intends to list 15 days of the allotment. So yeah, you should read it. So the use of the procedure, this is important. What will the company do with the money? The company intends to use funds raised to strategically and sustainably grow the business, acquiring property to be identified in Kingston, which is suitable to relocate our largest operations, thereby ensuring control of our revenue and allowing for even further expansion of our offerings. 2. Procuring suitable new biomedical equipment to offer additional diagnostic modalities at our Ocherius location. So they want to expand the services of the Ocherius branch. 3. Expand our offering of interventional procedures, maximizing on this fast-growing area of diagnostic imaging. So they're looking into other areas to really grow their business. I don't see anything to pay off debt or anything like that, which is good in a sense. Dividend policy. So companies normally say something about dividend. I don't think they will really pay a lot of dividend as a new company who want to reinvest and grow, but they're gonna say something just to suit dividend investors. The target dividend payout ratio and frequency. As I said before, they will have to say something, because you have some investors who just want dividend. But if you just want dividends, why not just buy the bond? Why not just buy bonds in the market? Anyway, the company say for the first 2 years after listing, while the company continues in its growth phase, up to a cap of 55% of distributable profits will be made available in accordance with applicable laws, subject to the company's need for working capital to finance the continuing operations and internal growth of the company. So the company say they might distribute up to 55% of profits, subjected to the needs of working capital. But we know this is a company that with 4 branches, 3 in Kingston, St. Andrew, 1 in Ocherius. They have a lot of capacity for growth. I don't think this company will be a really big dividend company, because they want to grow. So it's more a growing company. So, but that doesn't mean they won't pay a dividend, but it won't be as much that a dividend investor would be looking for. payout frequency. Director's fee. So you can see here you have the director's fee. 2018 to 2022. Going forward, the directors have resolved that the company will immediately discontinue the practice of paying directors' fee at the above rates and directors' fee the above rate, and will be restricted to the normal and customary amounts paid to publicly listed company of similar size for directors' fees. So the company, as stated here, I never looked at the director's fee in depth, but they are saying that maybe based on what the broker was saying to them, it seemed this company pay directors way more than the average public company. So they say they will discontinue that practice, which is good. And they're making adjustment and changes for being publicly listed. Risk to our operation. This is very important. So risk factors. So the risk factors, investing our share involves substantial risk. Yeah, we know that every company on the stock market poses some form of risk, but I'm going to look at the one specific to this company. So they say contracted radiologists. If our contracted radiologists terminate their agreements with us, our business could substantially diminish, as it would limit the number of cases we report. In addition, these professionals have strong relationships with referring physicians and large influence the revenue generated at our facilities. All right, that's a risk, but that's a substantial risk. But that risk can be managed well. They all based on competition also. Physician referrals. We depend on referrals of patients from unaffiliated physicians and other third party. Yeah. Professional malpractice liability. So anything that can cause the company to lose money through insurance and some malpractice, they cannot. That's a potential risk to this company. Disruption or malfunction in our information systems could adversely affect our business. Fair enough. So that's one. Cybercrime and all of that, vandalism. Late payments from Ministry of Health and Wellness, insurance companies, and other large credit customers. So yeah, that's a risk. That's a risk. But it can be managed, but those are generally customers that you can depend on. But the major risk, I would think, that I haven't seen them mention here. One thing about these types of companies, the machines are quite expensive, and yeah, I think they need experts to really service these machines. A lot of times these experts have to come from overseas, outside of Jamaica. That's a potential risk in some instance. So that, and the machines are very expensive. So but more likely, one of the things about this business is the experts needed, and also one thing is something that slipped me. What I was saying. Another I was thinking about was, yeah, this company needs a lot of capital. So it's not really a risk, but it could be a limiting factor for growth. So this company can grow at a substantial rate, but due to the capital intensive nature of this business, they might need a lot of capital to grow. Just to open one branch takes a lot of capital. So it's not a risk, but see, I mentioned I didn't saw this yet. Insufficient capital to fund growth. So yeah, as I was saying, that's one thing about these types of businesses, as you could see with Elite Diagnostic, which is a very similar business. They're very close. So diagnostic imaging setup is a capital intensive, high fixed cost industry that requires significant investment, start and fund operations. Capital expenditures include the upgrade and replacement of equipment, the procurement of parts, and the retrofitting of facilities for equipment. So all of this is very capital intensive. Unlike a company, another company, a lot of other companies, they can easily scale and move. So this company I would say it doesn't have economies of scale, but it cannot grow as fast as, example, a loan company, a food company, certain type of companies. So that's one of the risks of this business in a sense. So we really have to really value this company well if you really want to get into it. Anyway, I want to really cut down most of this information. Economic risk, I didn't mention that, but that's one of the risks that every business on the stock exchange will face. Economic risk, macroeconomic policies by the government, those are all systematic risks that we cannot escape. So most companies face that. So those are generic risks. So really have to look at the cash flow when I'm going to do the financial analysis further along and comparison. Industry overview. The diagnostic imaging involves the use of non-invasive procedures to generate representations of internal anatomy and function that can be recorded on film or digitized for display on a video monitor. So that's this business about internal. So it's non-invasive. Diagnostic imaging procedures include MRI, CT, PET, nuclear medicine, ultrasound, mammography, X-ray, and fluoroscopy. If you want more information, you could look at each of these. Various forms, fluoroscopy, X-ray, these are very critical medical services in the country. Diagnostic market overview. This market, is very competitive, this industry, because it's very competitive. A lot of companies offer these services, and when it come to competition, you have a lot of substitute, and in terms of barriers to entry, I don't think this company is really one that is easy to enter into. But in terms of, due to the capital intensive nature, but I mean, where there's capital, there is potential for competition. So you already go over their services already. Let me see if anything I'm missing. Key features of our services include patient-friendly, non-clinical environments, 48-hour turnaround, and routine examinations, interpretations within 1 to 2 hours if needed, flexible patient scheduling, including same-day appointments, extended operating hours, including weekends. So they seem very like they have very good customer service based on what they're saying here. I'm going to compare them with some of the other companies in the next video, and based on that I can make a judgment and if this company would be one that's more competitive than Elite or the others. All right, very important target market. So company services are primarily utilized by individual patients, medical practitioners, and hospitals across Jamaica. Suppliers, this is very important. So as I was saying, this can be a very once if the company can have certain issues based on this, if some suppliers are limited. Historically, we have acquired our diagnostic imaging equipment from large suppliers such as GE Medical Systems Incorporation, Siemens, and others. We purchase medical supplies from various national and overseas vendors. We believe that we have excellent working relationships with all our major vendors. There are several comparable vendors for our supplies that would be available to us if one current vendors become available. So this is very good. We primarily acquire our equipment with cash or through various financing arrangements with brokers. Timely, effective maintenance is essential for achieving high utilization rates of our imaging equipment. Yeah, so that's very crucial. But let's look at this diagram showing these services offered at the 4 location. So currently they offer 3 of the 5 services. Their main services in Orcherius, 4 in Old Rope, 5 in Winchester Medical. So this is very good. So the biggest branch they have is Winchester, which is where they want to relocate. So my assumption is that they want a bigger space and they want more capacity at that location. I don't know if they own the property, so that's another thing too. So Mullines Road only offers 2 services, X-rays and ultrasound. But they have 3 in the corporate area, which might be very good to me. When I wanna do, so you will understand why when I do the future video regarding the financial performance. So here they are putting a table of their competitors. So Elite Diagnostic, which is already listed on the stock exchange. They have 3 branches. They are located in Kingston and St. Han. If you want to understand this business, check out Elite. They already have more branches than Elite Diagnostic. That already tell me something. We're going to look at the profits and then see a general overview. Mona Radiology, 1 location, Medical Services Limited, Medical MRI Services Limited, 1 location, Oxford Medical. So based on what I'm seeing so far, this company could be the biggest radiology company in Jamaica based on what I'm seeing so far. So I'm gonna do more research into the competitors, but it seems to me like they are one of the biggest, if not the biggest, in this industry. So shareholders existing shareholders, Dr. Carly McDonough, Dr. Lily Bridgewater, Quad G Limited, ownership. So yeah. I'll look at the board of directors. Let me see. Got so the board of directors. Let me see. Directors and management. Dr. Carlin McDonough, it's the co-founder. Dr. Bridgewater, Dr. Stephen Lewis, right? Anyway. Dr. Marian Dr. Garden Bradshaw, Miss Caroline Da Costa. So far, what I'm seeing on this board, Dr. Jacqueline Leckie, Dr. Leon Fashan, Mrs. Keisha Anderson. So what I'm seeing so far is that the board of directors is filled with a lot of doctors. That's very good. Well, it's good in a sense where they understand the business and the industry. But they could be more diversified to me. This is the management. So what I just put, those persons, these are the management. But the board of directors previously, it's like about 80% to 90% doctors, which is, I think the board of directors could be more diversified because persons in one particular industry tend to think on similar lines. So sometimes it needs the X factor of someone outside with a different view, different mindset. So not saying that these doctors have the same mindset, but if we could have like a more diversified board, they could have different ideas how to grow the business overall. Yes, the management as a chief account and marketing manager, operations and patient affair manager, CEO, all of that, but you need board of director to be more diversified because you need new ideas and other types of ideas. Remember, in order to compete and stand out amongst the competitors, the board could be more diversified. That's what I'm seeing. That's my opinion, though. Let me see. So I'm not gonna go more. Just gonna look over the financial performance. Then I'm gonna just call this video off. Basically, management and discussion. Revenue. So from 2018 to 2022, the company revenue has grew from 352 million to 777. That's some impressive growth right there. 2018 profit before tax also grew substantially, also from 34. But I can see we're in 2019 and 2020. The profit hasn't really grown so much between 2018 to 2020. Well, 2021. But we know we had a pandemic in 2020 and 2021. So that could be a reason why Elite Diagnostic had some issues in those years, 2020, 2021. This company could have possibly faced similar issues of the machine maintenance, machine being broken down, and no expert to repair the machines at that particular point in time in the COVID pandemic when there was a lockdown. So we can see where the profit hasn't really jumped substantially until in 2022. There has been a big jump to 90 to $113 million before tax. So I'm going to have to maybe do a model But based on what I'm seeing here, 2022 is a big jump, a big jump. So I have to look into this, why there is such a big jump in just over 1 year ago. And while 2018, the profit had declined from 2018 to 2021. So I have to look at the story of these profits. But what I do know though is that the profit, the company will benefit from a 10-year tax remission. Well, 5 years they will pay no tax. Then 5 years between the next, then 5 years to the 5 years after, they will pay 50%. So year 1 to 5, they will pay no tax. Then year 5 to 10, they will pay 50% tax. So that's a benefit to stock companies that are listed on the junior stock exchange. So they will definitely benefit from this. But I'll have to look in the story as to why the profit is like this and what caused such a huge turnaround or growth in profit. Assets has also grew also. So the company asset has grown steadily. Liabilities, look at their debt. Non-current borrowings. The debt has also decreased. The decrease. The long-term borrowing. Lease liability, deferred tax. So there's nothing that is jumping out at me yet particular. So I'll have to do a next review of this company financial performance. We're gonna do it in a summary format though. So don't worry, not a next long video like this. And then I'll look at the cash flow. So that's it for today. I won't look any further on this business. I encourage everyone to read the prospectus, and I'm gonna do a summary video. Hopefully I can do it by Thursday coming. And until then, please like, subscribe, share this video.